You're welcome.
You are welcome. Welcome, everyone. Thank you so much for joining us today for Financial Fun Friday, where you're always welcome. I am your co-host, Darlene Jenkins, and my other co-host,
Dr. Rita B. Rowland.
Dr. Rita B. Rowland, and we are your Financial Fun Friday team, and we are being sponsored by ABS Retirement Solutions, where we're always bringing you what's new and what's next in the financial services industry. Yes, we are. And
Ooh, we
for
having fun
those of
today,
you, if
y'all.
you are just tuning in for the very first time, this is a webinar that we do on the first and third Friday of each and every month, and we also broadcast live simultaneously on Facebook. Hello, Facebook. How are you? And during this broadcast, what we do is we just pull back the curtain so that you can get an in-depth understanding of not only your federal benefits or your employer benefits, because this show is for everyone who's working and one day want to walk off of that job into the retirement of your dreams. And so the way we do that is we also give you some of the best retirement options and provide you with various financial nuggets and strategies. Now, if you would like to join us live here on the broadcast, where when you talk, guess what? We talk right back to you. You can always register at bit.ly/financial fun Friday. You can scan the QR code, take a picture, and come back. If you're looking at us on your phone, watching us rather from your phone, you can do that. Head over to Facebook. Hey, Facebook, like our page. We are at Facebook.com/Your AB Solutions. And then you can catch any episode that you've missed in the past on YouTube at ABS Retirement Solutions. Now, Rita, this is also the time that we do our check-ins, where we ask people to let us know what city, hey, and soon what country you're watching us from. So just put it in the chat on here or on Facebook as well. And let us know, hey, where you're tuning in from, because we appreciate you, because we know you could have spent this time with anybody else doing something else. So we're going to go ahead and do some check-ins. Rita, where are they checking in from?
We got Delaware. I think they didn't realize, but they gave me a personal note, but they're calling in, Darlene, from Philadelphia. So they haven't been on in a minute. Welcome. Let's see. We got another one. We got District Heights. We got New Orleans. Yes.
Woo,
New Orleans.
email me some beignets.
Right.
Email me some of the beignets down in New Orleans.
You can have the beignets. I want the bread put.
Oh, girl, I want them beignets. Yes, them beignets.
Oh, that's
So
so
thank
sweet.
you all. We appreciate you participating and jumping in and let us know. Facebook, we see you. Thank you, Bev. Yes. We appreciate you checking in with us. And so we are going to be getting into the information for this session, because guess what? It's time for us, those W-2s, 1099s, they're rolling in, and we are ready to start doing our taxes. But before we jump into the information that we're going to share with you today, I do want to let you know that this information is going to be presented in a generic approach. And why do we do that? Well, we do it because we don't have information about every single person that's on here now or watching us live on Facebook, or who will watch us later. So without knowing your complete situation, we can't customize and tailor this information to you. But what we can do is, if we start traveling down your street and we go over a topic that you feel like, oh my gracious, you're talking to me, I need to know about that, simply call your Financial Fun Friday team at 301-577-6340, and we can cover anything and help you with the information that we're sharing. So thank you so much for understanding, and apply the information that we're going over today where you feel it fits your needs. Rita, you want to start asking them, do you understand your taxes? Because it's tax time.
It's tax time. And Darlene, what we're going to share today, you guys, is going to be very quick, but it's so important to understand some basic things about your taxes, especially when time for prepare, because this may help you to save more money, put more money in your pocket in the next year to come. And when you think about taxes, we think about, when people think about taxes, Darlene, they always thinking about just income, but you got to think about, you got to add state, you got to add property, you got to add sales. When you start adding up all the taxes, it takes us about 5 months and a few days before we even can see clear. Because the first 5 months and a few days of our pay is going to taxes. Think about it. You're really only getting 6 months of your salary in your pocket, because the other 5 months go to tax. We got Social Security, we got Medicare, you got sales tax, you got all of those taxes, which eats up a lot of our income. So some things you can't even maneuver. You can't even shift sales tax. You can't shift it. But there's some things about your personal income taxes that is, once you understand, you can then make some wise decisions. So let's first talk about the standard deduction. So the standard deduction for 2024 has gone up some. So prior to 2017 and before, we had standard deduction and we had personal exemption. They did away with the exemptions and they increased your standard deduction. What does this really mean? What this means, everybody, that you just got some free money that the government said, we're not going to tax you on this free money. So for a single, the first $14,600 of your income, taxable income, is tax-free. You're not being taxed on it. That is free money, as they say, that you're not being taxed on. For the head of household is $21,900, and for married filing jointly is $29,200. The other option for married people is married filing separately, but for most times that could be very expensive for people because you're basically being filed as a single person. So when you're filing jointly, you have more deductions, but sometimes, like me, my husband don't want to file with me. I'm self-employed. He said he never gets his refund. So there are other times when you may want to file, but just think about it. We now file jointly, but that could be an issue that when you're married, see which one works out best for you. Now, the biggest issue for people, and this is all we're going to talk about today, is the difference between a tax rate and a tax bracket. And a rate is what you actually pay. This is what many people are not paying attention to. They're really only paying attention to, Darlene, is the bracket. And that is is what you'll pay on the next dollar you make. So let's make some sense of this. So for a single person, any taxable income between 0 and 11, your taxes is 0. Anything above that is 10% for the amount above that. Between 11,601 and 47,150, you're in a 12% tax bracket. So your 10% is on this 11,601. Okay, so this is what this 11 is, and it's the whole formula. Then the next bracket is 22, 24, 32. So many times when people say, well, I'm in a 24% tax bracket because I make 171,000. Technically, you're in the bracket for your income, but you're taxed on each bracket of income. So for your first 11, you're taxed at 0. For the next 30, you're taxed at 12. For the next 53, you're taxed at 22. For the next 50, you're taxed at 24. So effectively, you actually have this rate, not necessarily being taxed, all of that $150,000 not being taxed at 24. So let's look at this. Let's look at an example. It may help you. You have 100,000 of income. You're single. The first 14,600, remember, is free. In a sense, you're not taxed on it. It's like free income. So your taxable income is 85,000. Now, mind you, if you itemize, if you itemize, you may have more than 14,000. So you can have your home, your real estate tax, you have your charities, all of that could increase your standard deduction for both a married couple and a single. But to make it simple, I'm using the standard deduction. So it's 85,004. So we come here, 85,4. It says that you're in the 22% tax bracket based on this 84,000. Now, the base for that bracket, the base is 47,150, and the base tax is 54,26. So just once you hit that bracket, your base tax is 54,26. Now, they're going to take this 85,000, subtract out the base, and the excess is 38,249. The 38,249 is taxed at the 22%, which equals 8414. You add the 8414.78 to the 5426, and you got 13,840.78. That's what you actually are paying on the $100,000 of income. And when the tax bracket says you're in a 22% tax bracket, but really when you see you're in a third, what you actually paid was 13.84%. So your bracket is 22%, but your rate is 13.84%. So some of you guys are working on your tax and you're like, I got a $6,000 tax return. I got a $7,000. I get a lot of money back. Well, what's truly happening is that you're giving too much money up every month, every pay period, because you're taking out this 22%, when in all actuality, all you need to take out is maybe 14% or 15% for federal. Imagine 7% back on 100 grand of income. That's 7,000 on 150 grand. That's what, about 10,000. That's almost not $800 a month, less taxes. Maybe you bring it home. I mean, actually, that is a tax. So you bring home $800. What could $800 to? Many people are in debt. Many people, they say, file bankruptcy for not $1,000. They file bankruptcy because they're short $400 or $500 a month. So when you go get your taxes done this year, ask your accountant, what is my tax rate? Because then you can go do some more effective tax planning and maybe use that extra money to put into increase your retirement, help pay down your debt, help with your children, add some more things to your plan for financial planning that you need, because you're not giving up that money. So single people, that's what it is. Now let's look at this for a married couple. So a married couple, the same way. They joint income is 120, right? Their standard deduction for 2024 is 29.2. Their taxable income is 9,800. So they're in the 12% tax bracket. Their base, again, is on this 23,201. Their base is 2320. So that is the beginning of the taxes. And anything, the 90,800 subtract the 23,201, what's over the base is 67,599. So the 67,599 is in the 12% tax bracket, which equals 8119. You add 8119 to the 2320, and you got 10,431.88. For effective over the 120 is 8.69. You're in a 12% tax bracket as a married couple, but you're paying less than 9% in income taxes. That's a difference of about 3%. 3% on 120,000. Maybe you bring home an extra $4,000, another $300 a month, $350. It could mean something to you. So I just wanted you guys to understand, you're about to go get your tax returns done. You're planning for your future. Taxes are gonna, most seniors pay more taxes than anybody. You got all of the seniors, you got income taxes, you got state taxes, unless you live in a state that you don't pay taxes. I have a client yesterday I spoke to, she lives in Florida because she doesn't. She looks for all the states that she can live in where she doesn't have to pay taxes. So if she decides to move, it's going to be a state that she doesn't have to pay state taxes. But you got those taxes, you got Social Security, Medicare, you got RMDs are coming. So for you, managing your tax rates is very, very important, because it could be the difference of what income you bring in the house and what income you get to keep. And so I just wanted to come and make sure you understand that, because this is a thing that people just, it's so complicated. It could be a little, some people, it's over my head. I want you to bring it back in your head. Take your income, subtract your standard deduction. What's left is taxable income. Now, you guys, we're making this simple. There's other things that can be deducted from here, credits, we got children. We're just making it simple just so you can understand. This right here is 90. This is your bracket, your base, because you went from this 0 bracket to this next bracket. So on that, 10% above this is 2320, which is where that number comes from. And everything above the 23,200, it gives you is at 12%. So when you calculating, ask your accountant. If they cannot explain this to you, if they don't understand what you're talking about, you have a data inputter doing your taxes. You don't have a real tax planner. So if you got a data person just inputting and hitting a button and what comes out, they hand it to you. They're not planning for you. They're not telling you taxes are going up by the time your RMD comes. If they can help you strategize for a better to reduce your taxes, you have the wrong people, and you definitely need to call us at ABS. So I just wanted to share that with you today, and to know that taxes are low. Historically, they are at a very low rate, and many people don't understand. I didn't put that in there, but taxes overall have been averaging somewhere about 40-50% or higher over most since they started in 1913. We are in some of the lowest tax brackets that we've had. And this tax bracket is from prior to 2017 is what this is. But this right here is only until this tax status was until 2025. The laws change and they go back to what they were in 2017, which is what this is. So we got 2024 and 2025 to have low tax rate unless they decide to keep it. But according to the laws that were changed, it's going to be back effective in 2026. So if you're in this tax bracket married and you guys are at 300,000, you at 24%. Come 2026, you're going to be at 33%. And I don't know about you, that's another 9%. So another 9% or 300 grand is $27,000. That's real money that you're going to be out of. So if you're not planning to come up with a strategy that's better for you in your pocket in your future, you're not doing yourself a justice. And think about it. You may be retired, looking at RMDs, looking at conversion. You should do these things when you're paying the least amount of taxes. So just wanted to share that with you today. There are two systems of taxation in our country, one for the informed and one for the uninformed. And that was by Judge Learned Hand. He was the U.S. Court of Appeals Circuit, Second Circuit. I love him because he gives us information and knowledge that you pay attention. Look, he said we don't even have a patriotic duty to pay more tax than we ought to. So if it's not your duty, then you don't need to. And the fact that you showed up today, that you came on our Facebook, says that you are part of the now informed, and you can't say you didn't know, because I just explained to it for a single person and a married and a head of household. Yours is the exact same way, except for your number is different in terms of your standard deduction. And so I just wanted to share that today. As you go out and fill your taxes and get them prepared, look at your number, take a vested interest in your taxes, because you're the one paying it. You're the one who can lose thousands of dollars or hundreds of thousands of dollars over your next 20, 30 years simply because you didn't have a plan in place to protect yourself. So Darlene, I'm going to let you take back over.
Yes, Rita, that was some great information. Thank you so much for breaking down those tax brackets versus tax rates. And that is why Warren Buffett often says, you know, I'm paying less in taxes than my assistant, his secretary, because of the types of income. So that's why it's so important that you stay connected with your Financial Fun Friday team. Those of us here at ABS Retirement Solutions, as we do our workshops on taxes and retirement, stay plugged in, go to our website, because as Mr. Alan Lakin has quoted, planning, that's what we're trying to do with you. We're not doing it to you. We're not doing it for you. We want to do it with you. Planning is bringing the future into the present so that we can do something about it right now. We've looked out there, we've seen the challenge, and now we have time. Let's work on it and fix it. So you can reach out to your Financial Fun Friday team, contact us so we can help you map out a strategy to put all of those pieces together. That's what we're here to do. You can call us at 301-577-6340. Of course, you can always email us at fff@yourabsolutionsinc.com. As always, it has been a pleasure speaking with you all today. We're here for you. Reach out to us. Thank you for interacting with us. If you have any questions, which we know you probably will have some questions, reach out to your Financial Fun Friday team, and we're here. If we walk down your street today, give us a call, 301-577-6340, so we can hop in the car with you and get that situation changed.
Yes, thank you, Darlene. Yes, look, it's tax time. You know, we're the people that's bringing you the information. Don't let it fall on the deaf ear. Hey, look at your stuff this year. Pay attention because remember, this is our money. We work for it. So we
Yep.
deserve to be able to keep as much as possible. But when we're not informed and don't pay attention and don't take the time to what's the word, Darlene? To analyze our own financial situation, we can find ourselves having money is almost like you got a bag and they got a hole in the bag and money is just coming, you sticking it in a bag, but it's nothing to hold it in there. It's just coming out of the bag. Wasted money because you weren't able to seal it with the truth and understanding and add a plan in place to protect yourself. So we just wanted to share you. We at our 20 minutes.
Yep.
2 minutes over. So just say thank you very much. You guys have a wonderful weekend and enjoy yourself,
Wonderful, wonderful weekend. We appreciate you being here. Of course, make sure you join us in 2 weeks on the 15th, Rita. Is that the 15th?
The 16th.
The 16th. Like I said, join us on the 16th for the next episode of Financial Fun Friday. Everyone have a wonderful and safe and productive weekend. Bye, everybody. Thank you.